Hello there. Welcome to Financial Accounting N4. Today we want to look at a question from November 2021. This is the first part of the question, which is question 1. And this question requires us to prepare a wages journal. So we are just going to look at the part for wages journal. Remember, journals represents the books of original entry in a business. When transactions are first recorded, we've got source documents being issued, and then our information is taken from our source documents and then transferred to our books of original entry or our subsidiary books, which are the journals. So in this instance, we want to prepare the wages journal as part of one of the subsidiary books that we have, as we have many subsidiary books that we can have depending on our business that we are operating, right? This is the question that we have, and the question reads: the following people worked at Easy Traders for the week ending 3rd April 2021. And then we are given a column for employees, and then hours worked per week, wages per hour. We have got normal time per hour, and then we've got overtime, then gross wages per week. That's where we've got a question mark, meaning we have to find those figures. And then we are given additional information that is there. So we can just go through the additional information that we have. On the first part, they are telling us on how to calculate pension fund contributions. And then we've got on item 2, we've got medical aid fund contributions. Then we have got also the pay as you earn on item 3, unemployment insurance fund on item 4. And lastly, we have got something about staff association. So that's what we have. So here on the required part now, we are just going to look at the first part, which is 1.1 here. And 1.1 is asking us use the information above to complete the wages journal for East Traders for April 2021. So we have got our wages journal that I have prepared here. We have this one where we are having columns for the employee. We have got these 2 employees that we have here, and then the columns of the calculation that we are going to have. Obviously, in the first column, we are going to calculate the gross wage. So that's where we are starting. So we go back to see how are we going to calculate that gross wage. We go to the information that we have there. So you'll see that the gross wage, we are going to find it from the table here. We have got hours worked there, hours worked per week here, and then we have got wages per hour that you are given in the second column, then gross wages per week. So the column for hours per week is representing the normal hours that have been worked. If you look in the additional information, we are not being told what number of hours that are representing normal hours worked. So in that case, it means we are just considering this number of hours that you are given here as the normal number of hours that have been that are supposed to be worked for. By P Manda, 41 hours, and then J, if you join, is also having 40 hours. So we are regarding this as our normal hours. So we are going to multiply this hours worked per week that we have times the normal rate to get the normal amount. And then for the overtime, we are not told that this overtime is it the hourly rate or the total amount of overtime for these employees for the week. So we are just going to take this amount for overtime as the total amount of overtime for that week. So for P Manda, we are going to have 12 rand as the total amount of overtime that P Manda worked, and then 15 rand for JV join. So that's what we are going to have there. So it means, for example, for P Manda, we're going to say 41 times 10, then we get the normal amount, and then we add the overtime, which is 12 rand. Then I will also do the same to JV join, which means we are going to say 40, and then we multiply by 18 to get the total normal amount, and then we add the overtime amount that we are given there is 15 rand. So basically, that's what we are going to summarize there in the journal that we have, so that we get the gross wage there. So if you come here for P Manda, we are going to say 41 Then we multiply by 10, which is the rate per hour. And then we add the 12 rands. That is the amount that we have for overtime. So if you calculate that one, you are going to get if you calculate that one, that is you're going to say 12 rands. Sorry, 41 times 10, then we add 12. The total that you are going to get there is 422. So here we have 422. So that's what we have there for P Manda. Then we go back to check for the next one, for the next employee that we have. So here for JV join, we are saying 40 times. Basically, we are saying 40, then we multiply by 13. Then the amount that we are getting, we add the overtime amount that we have, which is 15. So basically, if you multiply that one, you are going to get 535. So we have 535 here. So we can just go and summarize that one on answer section. So we are going to the second row there. Right. So we are now saying 40. Then we multiply by 13. And then the total that we get there, we add 15, which is the overtime. Then you're going to get 500 and 35. So it means this is what we have in terms of the gross wage for P Manda and the gross wage for P Manda and VB join. And obviously we are going to create a column here for totals. We can create a column here for totals here, where we are going to add all the gross wages for T Manda and JV join there. For the total for gross wages, we are going to say this 422, then we add 535 to get the total. We are going to get here 957. So that's what we have in terms of this gross wage. So we go to the next column that we have there. So for the next column, we are going to calculate for pension funds. So we go back to the question and see what the question is saying about pension funds. Pension funds, item 1 is saying pension fund contributions have to be deducted at 2%, 2.7% from employees' wages for normal hours, and the employer contributes 2.7% to the pension fund. So on that table, we are only concerned about the for the 2.7% from employees. So we are just going to say the 2.7% times the gross wage for P Manda to get the pension fund contribution for Manda. We do the same to JV join. So if you go back there, it means for what we are going to do for P Manda, we say 0.027, because remember we have 2.7%. 2.7%. If you go back, 2.7% is a decimal now. 2.7% here is a decimal. It's if we say 2.7 over 100, we are going to get 0.027. So we are just going to multiply this times the gross wage for those specific employees that we have there. So here for P Manda, we are going to say 0.027. Then we multiply by 422. And obviously there now you get 11.39. So 11.39 becomes our for P Manda. Then you go to the next. There we are saying now 0.027. 0.027, and then you multiply by the gross wage that we have for JV join is 535. And then there now you get the amount that you are going to get there is 14.44. So that's what we have there. And then obviously we add now the total to get the total because we have got the row that we have there for for totals. So here we add 11.3, so 11.39 plus 14.44 to get the total there. And if you add those two, you are going to get 25.83. 25.83. So that's what we have there. Then we go to the next column that we have. We have now medical aids. So we go and check information that we have explaining about the medical aid. So you see that medical aid is on item 2. And the explanation is that medical aid fund contributions are deducted 20 rand per week, and the employer's contribution is 20 rand to the medical aid fund. So we are on the table of employee. So we are taking 20 rand. So this 20 rand is applying to both employees, that is PMANDA and JV join. So we are just going to put 20 rand there. Remember, it's also saying per week there. It's also per week. So that's the table. The table that we prepared is for per week. So we go and put the 20 rand on both employees here. We have 20. And also for JV join, we also have 20. So the next one is UIF. We go and check what we have in terms of UIF. UIF is on item 4. UIF you are seeing here is item 4. The unemployment insurance fund amounts to 1% of the gross wage of the employee for normal time, and the employer contributes an additional 1% to the unemployment insurance fund. So the 1% that we are concerned with at this moment is this one, 1%, and then we are also going to calculate the 1% for the employer later on. So what we are saying here, we are saying 1%, which is a decimal. If you say 1/100, you get 0.01. So we are going to multiply by this one times the gross wage to get the UIF. So we go back and summarize that working there. So here we are just saying 0.01, and then we multiply by this gross wage, which is 422. So if you multiply that one, you are going to get 4.22. That's for Manda, and then you do the same thing, 0.01, you multiply by the gross wage that we have is 535. And if you multiply that one, 535, you are supposed to get 5.35. Right. So the next one is PAYE. That is pay as you earn. We also go and check how are we going to calculate that one. That one is on item 3. Every employee who earns an income pays 8% of their taxable income every month. Pay as you earn is calculated after pension contribution has been deducted from the gross wage. So we are seeing that the 8%, in other words, we are saying 8%, and then we multiply by the gross minus pension contribution. So basically, this is the formula that we are going to employ there. As they are saying, pay as you earn is calculated after pension contribution has been deducted from gross wage. So your gross wage minus pension contribution, the net figure that we get, then we multiply by the 8%. And 8% as a decimal is 0.08. So we can go there and see the figures that we have there and try to summarize the working year. So we are saying 8% is 0.08, so we can say 0.08. And then we multiply by, maybe you can put brackets there. We are subtracting the gross wage, which is 422. And then we subtract the pension fund, which is 11.39. Then the answer that we could get there becomes our pay as you earn. So we are subtracting the pension fund. The pension contribution here is the one that we are subtracting. So we go back there. So if you calculate that one for pay as you earn for PMANDA, pay as you earn for PMANDA, you're going to get 32.85. So here you get 32.85. That's what we have there. Then we go to JV join. We can also try to see what we have there. So we can also do the same there. We are saying 0.08. We are multiplying by the gross is 535. 535. Then we subtract the pension fund, which is 14.44. So if you make the calculation there for JV join pence, that is we are on pay as you earn. You get 70. Sorry, you get 41.64. Then also we have the total figure that we have to calculate there for total for pay as you earn for both employees. So for total, basically here we are saying we are adding this one plus this one, 32.85 plus 41.64. Then the total that we are going to get here, 74.49. 74.49, and also here we're supposed to add the total, and here the total. So 20 plus 20, here we get 40. Then we add this one plus this one. The total that we get there is 9.57. Right, so we go to the next column. The next column is staff association. So we go to again to see what the question is saying about staff association. So staff association is here. All the employees belong to a staff association, and 12 rand per week is deducted from their wage. So this 12 rand is going to apply to both employees. So we are just going to put that 12 rand that we have there. So if you come here, we are saying 12 rand here. And here also have 12 rand. And obviously we have the total figure that we put there is 12 plus 12. 12 plus 12, and then we get 24. And then we go to the next column. The next column is now total deductions. So what are we going to say? Remember, total deductions, we are adding this one. Let's just maybe summarize the working there. We are saying 11.39 plus 4.22 plus 32.85 plus 12. Then we get the total that we get there, which is 80.46 here. Right. You come here again for VV join. We have got 14.44 plus 20 plus 5.35 plus 41.64 plus 12. You are going to get 93.43. 93.43. And obviously we also have the total figure that we have to put beneath that. That is, we say now 80.46 plus 93.43, and you get 173. 173.89. Right, so that's what we have. Then the last column is requiring us to calculate the net wage. So for the net wage, I think we can just summarize the working there in the space that we have there. So net wage, we are saying gross wage minus the total deductions. Then we get the net wage. So here we are saying our gross wage for P-Manda, we have got 422. Then we subtract total deduction, which is 80.46. Then obviously the answer that you get there, let's try to see here. You get, if you subtract there, you get 341.54. So this is the net wage for P-Manda. Then we go to the next one. The next one now we are saying we are having the gross wage as 535. So we are saying 535, and the total deduction that we have is 93.43. And the net figure that you get there is 441 point 441.57. So that's what we have there. And obviously, we are going to add the net wage for the two employees to get the total to put on the last section there. So here now, when we add this one, 341.54 plus 441.57, we're going to get 780, 783.11. So this is the total that we have. So that is what we have, guys, in terms of the wages drawn now according to the question that we have here. And then also you have got the second part that we have to calculate the employer's contributions. So this one is not going to be difficult because most of the employer's contributions are also similar to the amount that we've calculated for the employees. So you'd see that for PMAND pension funds, if you go back to the question, let's see what the expression that we have on pension funds. The explanation is that pension fund contributions have to be deducted at 2.7% from employees' wages for normal wages, and the employer contributes 2.7% to the pension fund. So it means we have got the same percentage here. So it means the same amount that we are going to have for the employee is the same that is going to apply for the employer. So we are just going to take the figure that we calculated there and put under the employer. So if you come here, you see that for pension funds, we are having PMAND is 11.39, and then we have JV join here is 14.44. So we are just going to enter those for the two. So if you come here now, we are saying for PMAND is 11.39. And then if join, it becomes 14.44. And for medical aid again, we go back and see medical aid fund contributions are deducted 20 Rand per week, and the employer's contribution is 20 Rand to the medical aid fund. So same amount again. So we are going to put 20 Rand again under the employer. So here we have 20, and here we have also 20. And then UIF also, go to see the instruction in terms of UIF. Right, on UIF, saying the unemployment insurance fund amounts to 1% of the gross wage of the employee for normal time, and the employer contributes an additional 1% to the employment insurance fund. So what does it mean? It also means we are also applying the same amount that we are having on the employees is going to apply there for the employer. So we go back again and see what we have there for UIF. So you'll see that for UIF, we have put 4.22 for PMAND, and we put 5.35 for JV join. So the same amount is going to apply here. So we are just going to put those figures here. So that's what we have there. So we say here we have 4.22. And for B join, we've got 5.35. Then obviously total deductions now we are adding. Here we are saying 11.39 plus 20 plus 4.22. We get 35.61. We do the same here, 4.44 plus 20 plus 5.35. We get 39.79. So this marks the end of our question that we wanted to look at in this video. Stay tuned for more videos to come. Those who haven't subscribed, please subscribe and share. We'll meet again in the next video. Thank you for listening.